Hello folks, this is Tom Hall from Tom K. Hall Financial Group with an economic educational update for May 2018. In this month's video, I'll discuss some of the major headlines that influence markets in April. I'll also provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Market volatility continued in April, but for the first time in months, all three major domestic indexes ended in positive territory. The Dow and the S&P each gained 0.3% in the month, although both indexes were still down overall in 2018. The Nasdaq added less than 0.1% but remained up 2.4% for the year. The start of corporate earnings season was easily among the most important financial occurrences last month. By April 30th, the majority of S&P 500 companies had released their first quarter 2018 earnings reports. Much of the news was positive, as 79% of the companies exceeded expectations for their earnings. In fact, by some measures, this earnings season is the best on record. However, while corporate earnings results were strong, stock prices did not experience large jumps in response. For companies that beat their expectations, the resulting stock increase was on average only 0.3%. So why wouldn't strong earnings cause large equity increases? This may have happened in part because investors saw any quick stock price increases as opportunities to sell for profit. But with trade wars, treasury yields, economic growth, and more, investors had many topics on their minds. Let's briefly talk about how some of these topics affected markets last month. The possibility of a trade war between the US and China worried many investors in April. Earlier in the month, one poll showed that over a third of financial strategists believed that a trade war was the biggest threat to a stock rally. By month's end, U.S. Treasury Secretary Steve Mnuchin was planning to visit China in hopes of preventing the trade tension from escalating any further. Yields on U.S. 10-year treasuries were also a topic many investors tracked in April. For the first time since 2014, yields rose above 3%. This level is a psychological benchmark because rising above that rate can cause some investors to leave riskier vehicles like equities. By April 27th, yields had dropped back below 3%. That same day, we received the initial reading of first quarter gross domestic product, or GDP. The economy experienced 2.3% annual growth between January and March of 2018, slower than the fourth quarter of 2017, but faster than analysts expected. Looking back at April, both the economic data and headline-driven news seemed to mimic the monthly performances the indexes posted. There was a lot of action and talk, but the end result was to move just a little bit, but seemingly in a positive direction. That's it for this month's educational economic update. Once again, this is Tom Hall with Tom K. Hall Financial Group, signing off for the month of May 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 801-316-4110. We'd be happy to talk to you. Required disclosure. While we believe that the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in the periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results.